Alrighty guys, welcome back to another week of fundamental analysis. This is the end of August um, and we're starting on the 1st of September today. Let's just go through our monthly recap on the trades we've made this month. So August we had two trades, one on gold, one on oil. The one on gold we had a 2.73 RR reward. We won that one. We actually lost on oil this week. And just to let you guys know, P&L wise, we are starting to pick up the risk. So I am risking 200 USD per trade, flat. So that equates to around 300 Aussie. So yeah, just letting you guys know the overall P&L for this month is a loss just because we've increased our lot size. I'll be trading this for the next until the end of the year, and dependent on how we go until the end of the year, we might look to raise that lot size to probably anywhere between, let's say 500 USD to maybe even 750 USD, around 1 grand Aussie. Yeah, my past 3 months of trading, you guys can see every 3 months have been profitable, and not only that, all 3 months were within my trading rules, and yeah, I'm just very confident with my trading, my discipline right now. So let's actually go through the oil trade we'd taken on the 28th, which was a Wednesday. It was in the morning, so Asian session. Let's just have a look at this trade. So basically I was bullish oil this week. I was bullish oil based off of fundamentals. We had a break of this resistance turn support here, right? A nice clean break. Came down. We got an entry on this candle here. During Asian, had my stop loss, a good length away from this, support I drew up, but you can see it cave through. So, yeah, we took an L on that trade. That's fine. I'm going to look for another entry down here, and we'll go through the fundamentals to show you guys why I'm still bullish on oil. So, that's the trade. That's August wrapped up. August was still a 1.73 R month, which is awesome work. So we'll hope September started off with a bang, but let's go through the fundamentals for now. So the 26th of August to the 1st of September, COT data, we see a bias change in Aussie, pound and euro, all bullish or long side. So just very interesting to see market conditions right now. US 30 and NAS both are, bias change 4%, 3%. We are starting to potentially trade US 30 now as well, so that's something to look out for. And gold plus 3%, no change in oil. So gives us more confidence in trading US 30 and gold to the long side from COT data. The only data we had this week was preliminary GDP, which was the exact same as last print on advanced GDP, so no change in my scoring here. Next week we do have big news like services, manufacturing, PMI, NFP, so very, very big news next week that's going to shake the markets. This week's data, things I wanted to highlight, you can see hotter than expected durable goods, core durable goods a little bit lower, so these cancel each other out essentially. Consumer confidence has increased higher than expected and was revised as well higher than expected, which is, people are spending. Dana Peterson, who's the chief economist, said compared to July they were more positive about business conditions, but also more concerned about labour market. So in terms of business conditions, stating they were good from 19.2 to 20.8 from last month. Saying business built bad actually decreased from 18.2 to 17.7. So you can see the consumers at least are a bit more positive this month's round. So they're starting to spend a bit more. The thing we're tracking, like oil spending, inflation, not inflation, spending needs oil. Oil will increase demand, increase there. It net bad for gold, because you know, better conditions, less likely that people are going to want to put in gold as a safe haven. But that's just one piece of data. We are going to look at the collective, and you'll see why I'm still long bullish gold. Spending as well on stocks, indices, more spending, more consumerism, stocks will go up. So net bullish on gold and indices, net negative on, net positive on oil and indices, net negative on gold, but we'll wrap it up and see everything else. Euro, you can see preliminary and flash German, Spanish PMIs cooler than expected, sort of supporting the euro rate cuts for September, guaranteed. USD GDP, you can see increase in GDP, so primarily reflected in increasing consumer spending, private inventory investment, and non-residential fixed investment. Again, to the pairs that we trade, more GDP, more gross domestic product, increased spending, bullish for both oil and less into stocks and indices, but still, spending, money flowing around. Again, net negative on gold, but yeah, I'm still very bullish on gold for the sake that, again, going back to last week's data, the Fed, 100% cutting rates in September, which is bullish for gold, and the focus being labor market conditions, which has been addressed this week as well with unemployment claims, still remaining sticky, which means, gold as a safe haven, still people uncertain. Briefly mentioning Tokyo CPI, this is the fourth straight month that it has been increasing, and part of it is phasing out of government subsidies on utility bills, so people are having to spend their own money now, as well as intensifying shortages caused by Japan's summer. So hotter weather, inventory sort of shelf life is decreased, the supply is decreased. So with wage growth expected to drive private consumption, therefore more inflation, the overall case right now from retail and people, looking at the data, is that Bank of Japan to continue to increase interest rates further with this expectancy of inflation being higher. PCE, we saw that spending strong, income is weak, promotes rate cuts in September. So that's again promoting rate cuts and bullishness for gold. GDP, you can see it's actually higher than expected 2 quarters in a row, and quite a nice boost, triple almost from last quarter. So it's overall really net positive for GDP and spending. PCE, same as expected. Not too much to comment on there. Next week's data, like I said, we've got ISM, jobs opening, NFP, very big data for next week. So my take home with again, this is last week's comment, but with rate cuts confirmed for September, still very bullish for gold, especially with the Fed's sort of positioning or outlook being labor market and poor labor market conditions right now. So again, that uncertainty, the rates being cut, people wanting to put more into gold as a safe haven. So very bullish on gold, backed up with my CAT data as well. Not the best readings for oil in terms of inventory. So inventory for oil actually went down. If we go back here, crude oil inventories higher than expected. Higher being less demand, less consumed, so not the best for oil. However, with GDP increasing, more oil consumption. Still happy to go long for oil. It's still net long, net bullish on the COT report, even though there's no change in bias this week. So still happy to go long for oil, and then still overall bullish with US 30, with hotter than expected spending data like GDP, PCE, and rate cuts as well, which is good for US 30. So, gone to the charts. Let's have a look and see what we want to do. first, let's go on gold here. What do we see in gold? We see, so we just, mind you, we were actually in this trade. We got wicked out, literally wicked out here, which is fine. You know, I was willing to take that L. So just taking this off. What I want to see is, you can see a bit of resistance, bit of liquidity being built up. I want to see it reach down here again and shoot up. That's all I want to see. And what I'm going to do is, if I do get an entry into here, right, we'll pop it a little bit under that wick. If I do get an entry here, if prices does get up to, let's say, around this resistance again, I will you know what, if price doesn't break, we'll keep stop loss here until it goes one side, because if it does break, there's much more room to the upside. So that's my entry on gold. Oil will go to the daily chart for our analysis, just because it works better in my opinion. Our loss was here from a break and retest of a 4-hour zone, which is fine, whatever, it's fine. Our second entry here, so essentially we're looking for long position here. We'll trail with the 4-hour, but that's what we sort of want. We want price to come down here and kick back up, probably bounce here and go back up here, right, trailing on the 4-hour. So you know, our trails will probably be around there if there's a zone on the 4-hour, and then there and then there, as per usual, right? So actually a really nice support zone here for oil, and you can see it's, you know, it's sort of like a pennant formation forming. Don't really care about the formation, more so just a nice support, nice area of liquidity around that 220 to 2.5 73 mark. So that's my trade for oil. US 30, from a technicals point of view, I don't really see an entry. If we go on the weekly chart, you can see we're at all-time highs, right? So there's no frame of reference. It's not a clean break right now on the daily. So look, it could shoot up. If it does shoot up, happy days, whatever. But right now I've just got this area here marked. I'm not going to touch US 30 until I have a clearer picture, essentially. So that's it for this week, guys. We're starting September next week. I'll catch you guys then.